Hey everyone, Jim Park here, your rental funding pro. Thank you so much for joining me today, and I'm excited to share with you a couple strategies that I know you'll be excited about. You know, my ultimate goal and objective is to help you achieve financial freedom investing in real estate. And you know, there's probably not a better time than right now to have success in the real estate investing market. While everyone is gloom and doom and talking negative about the economy, guess what? There's no better time than right now to really expand your portfolio and get out there and invest where no one else is looking. And you know, when you see a lot of people talking about gloom and doom and fear, you're not going to get that from me. You're not going to get that on this channel. What you're going to get is specific ideas and specific strategies that you can implement right now, okay? And to take advantage of this massive opportunity that we have. And I think for today, in the next 24 months, if you stay consistent and you follow the plan, I'm telling you right now, this is the time to really cash in and expand your growth, expand your portfolio in the real estate investing market. There's so many different opportunities, whether it's short-term rentals, long-term, and markets that most people aren't even talking about. What I want to share with you today is how to raise capital, whether it's your own portfolio or by partnering with other joint ventures. This will allow you to expand into markets that you never thought you could get into. Okay, so I'm going to share with you a couple of strategies and a couple of tips and a couple of things you should avoid to make sure that you get maximum capital going forward. And I also want to share with you a couple of strategies on how to get the funding if you're self-employed. You know, a lot of times in the real estate investing, you have to be able to prove documented income from your employment, but that's not the case right now. Okay, so I'm going to share with you those two strategies that I know you'll get a lot of value of.
Okay, one of the ways to get access to capital for your down payment on your next rental purchase is through a Roth IRA. It allows you up to $10,000 of earnings that you can withdraw free of both taxes and penalty for a home purchase if you meet certain requirements. So this is something that I recommend you meet with your tax accountant or financial advisor and see if you meet these requirements. Because you can also withdraw your direct contributions at any time because you already pay taxes on that money. So if you've created a investment account, a long-term retirement account that's invested in other parts of the market, this might be an option that you can access right now to get the money that you invested into it over time, along with the earnings that you made from the investment. And also, if you have a 401k or other type of retirement account, it also might be an option for you to roll it over into self-directed IRA that you can access to use as a down payment for your rental investment for cash flow. So this is something obviously you want to meet with your tax professional or financial advisor and see if that works out for you. Because in a nutshell, up to $10,000 in Roth IRA earnings can be withdrawn free of both taxes and penalty for a home purchase if you meet certain requirements. That's in addition to being allowed to withdraw your direct contribution anytime. This is huge because if you fall within this category, then instead of having it sit there until you're 60 years of age, you might, be able to pull this out right now and utilize that to really expand your real estate investing portfolio. So this is something I highly recommend you look into, and it's an option right now that's available. Now, the second option that I really like and I use all the time and I highly recommend is you want to go to a site called meetup.com. And then you type in the search criteria real estate investors. So I'm here in Miami, Florida. So you can put like wherever you live. And then when you click search, you're going to get these meetup groups. This, in my opinion, is the number one way to network and also raise capital so that you can expand your portfolio, whether it's your first purchase or you're looking to really expand into other markets. So real estate investing in general is a networking, and it's a situation where you really want to build relationships. And what better way than to go to a platform and a location where they're also looking to invest in your type of investment. So if I click here, Real Estate Investor Miami In-Person Network, what a great way to, network with like-minded people. But most importantly, this is where they're going to be hanging out. Okay, this is where people that want to invest in joint venture, this is where you're going to be able to meet them, face to face, and also build relationships. It's a relationship game, and I highly recommend this, this platform, and to really be consistent and show up and meet people. Because look, Real Estate Wealth Institute, and you have attendees that you only need one. You just need one person that connects with what you're trying to accomplish, and next thing you know, you're going to get all the funding and capital you ever need, because you were able to build a relationship with someone that has the exact goals that you do. Okay, so I highly recommend this meetup, and put in your keyword and utilize this consistently. Okay, it's just you're one connection away from getting to where you need to go. All right, so this is what I highly recommend. Now, for those of you that are self-employed or even full doc in terms of verifying income, Fannie Mae has tightened standards on investment properties. The Treasury Amendment means it has a 7% limit on acquisition of single-family mortgage loans secured by a second home or investment properties. Fannie Mae is tightening the underwriting criteria for second homes and investment properties. In a nutshell, they don't want to do these type of loans for, second homes or investment. So, as I mentioned before, what good is it if you have found the right property in the right location, but you can't get funding? Okay, so this is where another source of funding has come into play. It's called non-QM and DSCR, debt service coverage ratio. This type of funding does not require tax returns, no personal income or job. I mean, think about that for a second. Okay, if you could get qualified on the property's cash flow and not your personal income or job, what better way to get started right now? Okay, so no tax returns, no personal income. I mean, that's huge, especially when you have Fannie Mae and Freddie Mac saying, hey, we kind of don't want to write these type of loans anymore. Okay, so now we have a way to get this type of loan to where you can actually take advantage of this purchase in real estate investing without, any kind of documented income. So the whole purpose behind this is, the investor just wants to make sure that this property generates enough cash flow to cover the monthly expenses. So there's this thing called debt service coverage ratio, DSCR. So for example, if you have a monthly rental income of $4,000, and then your monthly expenses, right, PITI, and if it's a condo, you have association, also is $4,000, then that's where you get the 1.0 DSCR. Okay, they will provide you financing for that property without looking into your tax returns or personal income, as long as it meets this criteria. Okay, I mean, that's, in my opinion, a game changer, to where you normally wouldn't have access to this type of funding, especially when, Fannie and Freddie are tightening up on this type of loan. And then here's another example. Okay, little reserves as 2 months, FICO's as low as 620. So it's giving you a lot of options to be able to get this type of financing to where normally you wouldn't have access to. All right, so this type of loan that's out there, the DSCR non-QM, along with getting networked and getting relationships built to raise the down payment, and possibly your own personal retirement account, is a great way to get started right now and to take advantage of this opportunity. And there's really no excuse not to get into the real estate investing, especially with the opportunity that's out there right now. Okay, so if you have any questions, feel free to reach out, and I could run some scenarios by you and let you know what your interest rate would be based on this type of loan criteria, loan amount, and what you're looking to accomplish. I mean, they'll go all the way up to 80% loan to value. So if you're buying a property for $300, okay, so 20% of that you could raise through your network or your retirement account, and you're off to the races. Okay, so if you have any questions, please reach out, and I look forward to talking to you again soon.